So here's my agenda. First, I'll provide you with an overview of what money is and what its core functions are. Then we'll have a quick look at the current system of central banks and commercial banks. Afterwards, I'll introduce you into a taxonomy of money, and in particular look at the role or the possible role that CBDCs could have and what the issues are they were meant to tackle. And finally, we'll look at design options for CBDCs, which mainly turns around the topics of access, centralization, and also the distinction between token-based and account-based models. Okay, but let's start first with the simplified overview of what money is and what its core features are. Because in academia and practice, there are three features that are listed that are meant to be around in order for something to be called money. And the first one is medium of exchange. So this means that money can be used to intermediate the exchange of goods and services. The involved parties agree on a common ground for determining value. So for instance, in this example, you can see a community who uses beaver pelts as a medium to trade for other goods. So if I have a pot of potatoes and I need milk, this is pretty handy because I don't have to look around for somebody who has milk and needs potatoes, but I can sell my potatoes to a third party, get the beaver pelts, and can then go to the third party who has milk and buy the milk by handing over the beaver pelts. So medium of exchange as the first requirement. Second one, store of value. So money maintains its value over time, can be spent, or it can be exchanged at a later date without a disadvantage. Now here in this example, you see an ounce of gold could buy a toga in Roman times, but it can still buy a nice suit today. So that's pretty good. If we compare it to my pot of potatoes, that would be a pretty bad store of value over the same time period. So store of value. Third one, unit of account. You can use money to measure the market value for goods, services, and other transactions. So you can compare goods with money. For instance, here, housing prices in Japan can be compared using the Japanese yen as a unit of account. So once these three core features are fulfilled, are there, medium of exchange, store of value, unit of account, we can say, okay, this object, this asset is considered money. If not, we can exclude it from further discussion. Now, with these functions in mind, we'll now jump over roughly 3,000 years of monetary history and probably also a similar large number of currency systems, and take a closer look at how the modern central bank system works. It's really simplified, but in almost every country of the world, there is a central bank, and the central bank is issuing money. And basically, this can be done in two ways. First, they can issue coins and or banknotes, and these coins and banknotes are then accessible to a wide public. So, for instance, people like us, but also businesses, organizations, commercial banks, pretty much everyone can use coins and banknotes. And the second form, how you can issue central bank money, is that certain participants, mainly commercial banks, have deposits, have account at the central bank, and the central bank provides deposit money to these institutions. Now you might ask, okay, and what about our money? I mean, you might have some banknotes at home, but mostly you have your accounts at the commercial bank. Is this also central bank money? And the answer here is no, it's not. Why is that? with central bank money, you have a direct claim against the central bank. And you do have that with coins, banknotes, and deposit money for commercial banks. But with commercial bank money, if you have your account at a commercial bank, you just have a direct claim against said bank. So what probably most people consider real money is, of course, real money, but it's not central bank money, and that's an important distinction. Now, as we've seen on this slide, there are different types of money, and to categorize them, the Bank of International Settlement came up with this so-called money flower. It's supposed to look like a flower here, and I think this taxonomy of money has some weaknesses, but it's a good starting point when we want to understand the different aspects of money across several different dimensions. Now, let's start with the dimension that we've been just talking about. Money can be issued by a central bank or not. So you see here, cash is within the green ellipse, so it's central bank issued money, whereas bank deposits are outside the green ellipse, so they are no central bank money. We also come across digital versus non-digital money. Digital money, bank deposits are digital money. Cash obviously is not digital money, so it's outside the blue ellipse. Then an important distinction is also the distinction between widely accessible money and money that's accessible just by a small and well-defined circle of people or participants. And that's also important in relation to CBDC. So if CBDCs are widely accessible, we call them retail CBDC. So they are accessible to basically everyone as cash, for instance, as opposed to so-called wholesale CBDC. And Project Helvetia will be a project about wholesale CBDC, where just a small circle of participants has access to the CBDC, mainly commercial banks. Okay, and then the last circle, or the last distinction, is the distinction between token-based and account-based currencies, and we'll look at that in a minute, so I won't comment right now. Do you have questions so far? I'll just go on. But I mean, you might ask now, what's this all about? I mean, we have our bank accounts, we have our cash. So why are we talking about CBDCs all of a sudden? And obviously, a lot of people and organizations have thought about, do we really need CBDCs and what might be the reasons? And I just picked out a few. Here on this list, you see reasons that the ECB brought forward, but there are many more reasons that are not on this list here. Let's just go through them. Enhanced digital efficiency. Of course, the digitalization and independence of a certain economy can benefit from a digital form of central bank money available to citizens, for instance. Also, monetary policy option, the introduction of a CBDC might reinforce the transmission of monetary policy, because the central bank can set the remuneration rate on the CBDC. That's also interesting. Backup payment system. CBDC could constitute a possible contingency mechanism for electronic retail payments that could remain in use as a backup when private solutions are not available or not available anymore. International use, the CBDC could potentially be accessible outside the issuing country's area. So if people in Switzerland think that the Canadian CBDC is cool, they could start paying with that in Switzerland and outside Canada as well. Cost saving, that's actually a best case scenario. A well-designed CBDC may help to reduce the overall costs and ecological footprint of payment systems. Now, this list of upside potential and advantages could be continued for a while, but let's just conclude the list by highlighting two important reasons for retail CBDC. The first one is reduced counterparty risk. So if CBDC units represent a direct claim against the central bank, the risk for end users, and they do actually, which we've just learned, right? So the risk for end users from insolvency of involved intermediaries is limited, obviously, because they have a claim against the central bank. The second one is financial inclusion. By reducing the amount of friction, costs, and overall complexity, a CBDC could provide a safe and affordable environment for people who are currently excluded from mainstream banking systems. Now, to close this list of reasons, let me just highlight a quote from the recent fact sheet on a comprehensive framework for responsible development of digital assets issued by the White House this September. And they write, potential US CBDC could also help preserve US global financial leadership and I think that's interesting, support the effectiveness of sanctions. But a CBDC could also have unintended consequences, including runs to CBDC in times of stress. I think that's quite a thought-provoking quote, and maybe we could come back to that during our discussions. Okay, but now let's talk about design. When a central bank thinks of issuing a CBDC, they have actually multiple design decisions to make. As with any complex system, they have to decide on the level, for instance, of centralization. So should the infrastructure be centralized with the central bank or decentralized with the participants? Then there are decisions to make with regard to access, direct or indirect access. What role do intermediaries play? And then the last one that I'll highlight is, should the system be account or token based? Obviously, there are many more decisions to make, and if you're interested in them, you might get more information in this technical evaluation paper. The link you find below on the slide. It's been issued by the White House as well, also this September. Okay, now let's start with the decision about centralized or decentralized infrastructure. If you choose a centralized infrastructure, this infrastructure will be provided and operated by the central bank. So basically all transactions will be processed through the central bank. Goes to that, decentralized CBDC, you have a decentralized infrastructure. So the end users or involved intermediaries could execute the transactions themselves, so without the intermediary role of the central bank. So basically, centralized CBDC, the central bank is involved in every transaction. Decentralized CBDC transactions can be made without the central bank stepping in, because they can be made by users or intermediaries. That's that distinction. Obviously, under both systems, CBDC transactions must comply with the appropriate safety standards brought forward by the central bank, even if the central bank is not involved in every single transaction, as it's the case with decentralized CBDC. Direct versus indirect access, that's the second consideration I'd like to discuss with you. If end users have direct access to a CBDC system, they are allowed to transfer CBDCs without the help of intermediaries. They can do that by themselves. So the intermediaries just act as gatekeepers, and they say, okay, person A is all right, we've checked that, we've checked all the boxes, so person A is allowed to access the system by herself, by himself. different with the indirect access or the hybrid system. Here, the end users don't have any access to the infrastructure, and the intermediaries don't just act as gatekeepers, but as real settlement agents. So they actually have to process the transactions. Still, also with the indirect access system, users hold a direct claim on the central bank, because otherwise we wouldn't talk about CBDCs anymore. Well, remember the slide that we've had a look at before. When we just have a direct claim against your commercial bank, it's not a CBDC. The third design consideration is about the token or account-based model. Now, this distinction is not an easy one, and let me just tell you at the beginning that we shouldn't confuse different layers or different aspects. Now, it's here, if I talk about token and account-based model, I'm not talking about the technical aspects of, for instance, a blockchain that might be used. So we're not talking about the blockchain view of token or account-based systems, right? Rather, this distinction between token and account-based model is borrowed from the distinction between account-based and value-based payment systems. So it's not the same. And the starting point for these two design options is the verification mechanism in connection with the transfer of the CBDC units. So in a token-based or also a value-based system, the payment is checked for the authenticity of the value used. And the identity of the payer, on the other hand, is totally irrelevant for the verification. In an account-based system, on the other hand, the verification of the payment is done with the verification of the payer's identity. So a central entity checks the identity of the payer. It works similar to a bank account, right? Where you can just think of online banking, where you have to prove that you are you. You write numbers, you write down numbers or click something on your iPhone, etc. And you prove that you are you. And once that's established, you are allowed to initiate the transfer of the money. So that's an important distinction. Now, when you look at what's currently going on around the world, we can see many activities and projects here on this slide. And this list is growing and growing. Canada's here at the top, was one of the first central banks which experimented with DLT-based decentralized systems for settlement and transfer. They had the project Jasper, and the bank is also working with the Bank of International Settlements to launch a BIS Innovation Hub center in Toronto, which I think is interesting as well. And you can also see here on this list, Switzerland with project Helvetia and other projects in connection with CBDC. And actually, I'd like now to give the floor to my colleague, Fabio Wieser, who's stepping in for Benjamin Müller, who can't be here with us, unfortunately, due to medical reasons, in order to give you some insight into this project. Thank you.
Thank you, Mirjam. So as Mirjam said, I'm jumping in for Benjamin Müller, who is also in my team at Swiss National Bank, Switzerland's central bank. And I'm gonna give you an overview of our project Helvetia, which was all about settling tokenized assets in central bank money. Next slide, please. Thank you. So why did we do Project Helvetia? In Switzerland, we had the situation that we have the infrastructure provider of Switzerland, the financial market infrastructure provider, the SIX company, we had a subsidiary, the SDX, the Swiss Digital Exchange, who started to build a regulated central security depository and an exchange based on DLT technology. And they wanted to have, they wanted to offer financial instruments based on this new technology, so trade and settle tokenized assets. And the settlement that they wanted to offer, that they do offer since fall last year, actually, when they went live, would be atomic and instant, and it would be multilateral. So SDX claims that this new technology enables programmable business logic like smart contracts, and with that provides an efficiency gain. As such, and if you could jump to the next slide, we as a central bank, it raised certain questions on our end, right? So to begin with, and this is a very general question, what if DLT is more efficient than the current technology of the financial market infrastructure? If this is not the case, DLT will not be used. However, if DLT was the more efficient technology, and this is a question that I do not have the answer to just yet, should then the cash leg of a transaction be settled in central bank money? Again, if we say this is not necessary, then we can have private token money. This could be tokenized commercial bank money, or just any kind of token, private token, right? But if we come to the conclusion that central bank money is needed, digital central bank money is needed, then it brings us to the question whether this digital form of central bank money could be based on the more traditional digital form of central bank money. And we have this in our real-time gross settlement system, the Swiss interbank clearing system. And we could establish interoperability between the DLT-based infrastructure and this traditional technology-based payment system, right? Or the second option could be we could issue a wholesale central bank digital currency, a token-based money, so to say, in a technological sense, not in a legal sense, to settle those transactions on such a DLT-based infrastructure. And where this would be feasible to settle in central bank money was the scope of project Helvetia. Next slide, please. So in 2019, we teamed up with the BIS when the BIS established its BIS Innovation Hub, the Bank for International Settlement, sometimes called the Central Bank of Central Banks. By now, they have 5 live centers all around the globe. Toronto is to be established sometime next year, hopefully, together with the Eurosystem Center. We as a Swiss National Bank host the Swiss Center, which is based in Basel and Zurich. Basel because the BIS is based in Basel. So we did those CBDC projects with the Bank for International Settlements Innovation Hub, 3 projects as we can see on the next slide. That's Project Helvetia. We did a second phase where we went not just into the financial market infrastructure of SDX and our payment system, but also into the core banking systems of commercial banks, but also of our own core banking system to see where we can fit in the processes there. After first phase, we also went cross-border with Project Jura. We teamed up with the Banque de France, the French central bank, and also based on the technology that was provided by SDX, we did an experiment in the cross-border space to use wholesale CBDC to settle foreign exchange transactions. So when you first started Project Helvetia, we needed to set some requirements, as we can have in the next slide exactly. We asked ourselves, what needs to be given if we were to issue a wholesale CBDC on such a platform? First of all, it was clear that wholesale CBDC should be as similar to the money in the system now, and as such, it would need to be a permanent central bank liability. That is a liability, a token that is not just on ledger overnight, but it remains intraday, but it remains overnight on the balance sheet of the central bank. Also, we wanted to have the balance sheet size of our own balance sheet, but also of financial intermediaries like banks that would hold such a wholesale CBDC, unaffected by issuance and redemption. That is, we would substitute the reserve balances in the account-based system, in the legacy system, with wholesale CBDC one by one. This was also to underline the fungibility between reserve balances and wholesale CBDC, two different forms of digital central bank money, which should be reinforced first and foremost by access policy. So the whole same institutions that we allow today to hold our digital form of central bank money should be the ones allowed to hold the new form of digital central bank money. A value date, this was especially important for the calculation of the remuneration, of course, and mostly a technical thing. As a central bank, we have certain needs with regard to control and monitoring of the wholesale CBDC. This comes both from the regulator also, but also out of our own needs. And of course, such a solution would need to be robust in terms of the legal situation, to have legal certainty. On the next slide, we can see a high-level solution design of that we used in Project Helvetia. On the right side, the rectangle in the middle was sort of the container for Helvetia phase 1, where we only looked at the digital exchange of SDX, the DLT-based system, and the payment system, SIC, our real-time gross settlement system. We looked at test systems of both systems. Sorry, could we go back? Exactly, thank you. And in the second phase, we also looked at the core banking systems, as is indicated with Bank 1 and Bank 2. For the project, we had SDX host all nodes, also those of the banks and our own nodes, but obviously this could change in a live system. If we go to the next slide, we see what use cases we looked at. And the most important use cases obviously are issuance of wholesale CBDC, that is converting the reserve balances that are held in the SIC system into wholesale CBDC. The reverse action, the redemption, so converting wholesale CBDC back into reserve balances. Then probably one of the most important use cases is delivery versus payment, so the exchange of security against cash and simultaneous exchange. And of course, we also looked at the payment between two participants of the system. On the left corner of the graph, you see the notary node, indicating that the consensus, in a sense, of this DLT-based system is centralized. And the notary node is controlled by the provider of the infrastructure, SDX. We also see the observer node, indicated with the eye, that enables us to monitor transactions in wholesale CBDC. What did we find in Project Helvetia? We had findings in 3 dimensions, as indicated on the next slide. We had operational findings, legal findings, and findings with regard to policy. On the operational side, it was very important for us to see that it is feasible both for banks and central banks to have such a solution, to have wholesale CBDC. The key use cases, delivery versus payment, they worked well. And we were able to integrate the wholesale CBDC into the core banking systems, both of commercial banks, but also our own system. Not less important are the findings on the legal side. So the solution that we looked at allows for the robust ownership rights and finality of transfer. This gives the legal certainty to use such a system with wholesale CBDC in productive systems with high value transfers. As I indicated before, we would issue such a wholesale CBDC in a privately operated DLT platform. And this also is possible from a legal standpoint in Switzerland with the laws that we have. One thing that we must we must retain the controls, monitoring functions in order to do so. From policy side, the picture is not that clear, but it was also not in scope of the project to assess whether it is a good idea from a financial stability point of view to issue wholesale CBDC. But of course, having delivery versus payment and payment versus payment transaction settle in central bank money would reduce settlement and credit risk, as opposed to having them settle either without delivery versus payment, so without a simultaneous settlement, or in privately issued money, where you again have the credit risk. The monetary policy, the implications depend really on the design of a wholesale CBDC. We have indication, of course, that you would have fragmentation and segmentation. It's hard to we need to settle have standards for settlement, and we also have some governance questions that remain with such a solution. If you want to have more information, more detailed information on the projects, I can suggest that you have a look at the reports on the projects. If you're not all about reading, we also have videos that you can have a look at that give you a good overview of what we did and how we did it.